How to calculate two stocks portfolio risk and return with probability case under Sharpe Index Model. We will learn in this video. So let's get started. Okay, so here is the question. In this question we can see that there are the two stocks, that is stock A and B, having some rate of return in percentage in a particular period or observation, and we have a market return as well in the percentage form in a particular period. Based on this return, we have received the probability value under the different state of economy or different period. Okay, and we have a investment weight for the stock, we can see here. All right, so based on these the questions, let's calculate the portfolio risk and return under this model. Okay, all right, so here we have a 9 step, followed by the preparing the computation table, identification of investment weight for a stock, calculation of number of period or observation, individual risk and return of a stock, calculation of covariance and correlation coefficient value of a stock with market, individual beta coefficient of a stock, portfolio beta coefficient of a stock, and portfolio risk and return of a stock, and conclusion and decision. Okay, now you can see that I have partially done with the two steps, which are nothing but it's a question part, that is a step 1 and step 2. Okay, now let's calculate the other part of this step, okay, which is the computation table. And this table can be calculated by simply following the notation of each column. Okay, so first let's calculate this column. So press the equal to sign, press the open parenthesis, now select this one minus this one, now press the F4 key to absolute reference, close parenthesis, now press the power sign from your keyboard, press the value 2 times this one, that is the probability value. And now before pressing the enter key, let's fix the column. So I'm going to use the dollar sign here, and now press the enter key. Alright, now click here and drag from here to here. Okay, now for other this column we can calculate the same as earlier, so let's calculate quickly. Alright, now let's go to the step number 3. Click here, and now let's calculate the number of period or observation. So press the equal to sign and use the counter function here. So I'm going to type counter, now press the tab and select the range from here to here. Now press the F4 key to absolute reference, and now press the close parenthesis, now press the enter key. Alright, now for the next step, let's calculate the individual risk and return of a stock based on the following statistical measure. So let's calculate one by one. So first, the expected or average rate of return, and it can be calculated by simply using the sum product function in Excel. So press the equal to sign and type sum product. Okay, and select this range from here to here. Now press the F4 key to absolute reference, now press comma and select the range from here to here, and now press the close parenthesis, now press the enter key. Alright, now click here and drag from left to right. Okay. Second, the variance can be calculated by simply taking the value from the computation table. So press the equal to sign. Let's come here and select this one. This is a variance value of market. Now press the enter key. Alright. Now click here and drag from here to here. Alright. Third, the standard deviation can be calculated by simply applying the square root to the variance value. So press the equal to sign and type sqrt function. Now press the tab and select this cell, and now press the close parenthesis, now press the enter key. Alright, now click here and drag from left to right. Okay. Fourth or last, the coefficient of variance. and it can be calculated by simply dividing the value of standard deviation by the value of expected rate of return of the stock or market. Now, so press the equal to sign, and now let's click here, divide by this one, and now press the enter key. Alright, now click here and drag from left to right. Okay, now for the next step, which is calculation of covariance and correlation coefficient of value of stock with market. Okay, in this step we have to calculate two covariance and two correlation coefficient. Okay, so let's calculate the first covariance of stock A and market. Okay, so it can be calculated by simply taking the value from the computation table. So for this requirement, press the equal to sign, and now let's come here and select this one. This is our the covariance value for stock A and market. Now press the enter key. Alright, similarly for next covariance of stock B and market. Okay, and it can be calculated by simply taking the value from the computation table, which is this one. Okay, now press the enter key. Alright, now correlation between the stock A and market can be calculated by simply dividing the value of covariance by the product of standard deviation of stock A and standard deviation of market. Okay, so let's calculate it. So press the equal to sign and select this one, divide by this one times this one, and now press the close parenthesis. Now press the enter key. Alright, similarly the correlation between the stock B and the market can be calculated by same as earlier. So press the equal to sign, click here, now press the divide sign, and now open parenthesis. Now this one times this one, and now press the close parenthesis. Now press the enter key. Alright, we got it. Now the next step is individual beta coefficient of a stock. Okay, so first let's calculate the beta coefficient of a stock A, and it can be calculated by simply dividing the covariance of stock A and market by the market variance, that is this one. Okay, so let's calculate it. So press the equal to sign, and now let's select this one, divide by this one, and now press the enter key. Alright, now let's make this value up to 2 decimal places, so I'm going to use comma style. Okay, now for beta coefficient of stock B, it can be calculated same as the earlier. So press the equal to sign, and now let's select this one because the covariance of stock B and market. So select this one, now press the divide sign, and now click this one, and now press the enter key. Alright, now let's make this cell up to 2 decimal places. Okay, now for the next step, which is portfolio beta coefficient of stock, and it can be calculated by simply adding the weighted beta of stock A and the weighted beta of stock B, while the weighted beta of stock is the product of the beta coefficient and weight of the stock. Okay, so let's calculate it. So press the equal to sign and select this one times this one plus this one times this one, and now press the enter key. Alright, we got it, the value of beta coefficient of the portfolio. Okay, now for the next step, that is portfolio risk and return of stock. Under this step, let's calculate first the portfolio expected return. Okay, and it can be calculated by simply adding the weighted rate of return of stock A and the weighted rate of return of stock B, while the weighted rate of return is the product of the rate of return and weight of the stock. Okay, so let's calculate. So press the equal to sign and click this one times this one plus this one times this one, and now press the enter key. Alright, second, the portfolio expected risk, and it can be calculated by using the formula displayed on the right side of this sheet, that is here, you can see here. Okay, let's use this formula. So I'm going to use this formula and show you the value. Alright, we got it, 9.88. I have converted the variance value into the standard deviation because we used here the standard deviation. Okay, let's move on to the next final step, which is conclusion and decision. So under this step, our decision board is showing that stock A is favorable due to low beta as compared to B, right? The decision can be low beta. Okay, under this model, the beta is considered as a risk. You can see that the beta coefficient of stock A is lower than beta coefficient of stock B, so that our our decision is showing this one. All right, and I have made this decision board automated by using the if function. You can see here. Let me zoom in for you. Okay, you can see here. All right, now press the enter key. All right, so guys, we are done. That's all for now. If you find it useful, please hit the like button and don't forget to subscribe to this channel. See you in the next video. Signing off.